Well, Etina poll expects a decent kind of a quarter for Tech Mahindra. Expect the dollar revenues at $1360 million, which is a growth of 2.3% on a sequential basis, and in constant currency revenue growth of 2.4%. In fact, the TCV of the new deal wins is likely to be strong at anywhere around $800 million. This is as per Kotak estimate. And to know that this TCV of new deal wins is likely to be higher versus the average quarterly run rate of nearly around $400 million. It is still likely to be slightly lower versus the last quarter. Enterprise vertical is likely to do better during the quarter versus the communication vertical. June is a seasonally weak quarter on account of lower revenues from Comviva, and multiple small acquisitions in the last quarter are likely to contribute anywhere between $10 to $11 million in terms of revenues, and these acquisitions have been on the likes of Perigord, Digital Honest, Aventus and Momentum. EBIT margin may decline on account of wage hikes and Comviva seasonality. Etina poll estimates EBIT margin at 14.5% versus 16.5% in the previous quarter. Profit is seen at 1210 crore, which is a growth of nearly around 12% on a sequential basis. Well, the commentary in terms of the large deal pipeline would be fairly important. In the last quarter, management had stated and guided that they would be clocking in double-digit growth in FY22. So what are the likely drivers for FY22 double-digit growth? That would be a key multiple to be watched out for, along with the entire commentary in terms of growth strategy, further small acquisitions, or the nature of M&A that they plan to undertake going ahead. The 5G opportunity and the likely time frame for revenues to flow in from this would be another key multiple, along with the margin performance and rising attrition levels. In the industry, we have seen attrition level rising, and Kotak analyst estimates states that attrition will be a key variable for noting delayed wage revisions and relatively weaker compensation policies followed by Tech Mahindra. So watch out for the commentary here. If you look at the stock has recently hit record highs in July itself, and it trades at nearly around 17x FY23 price to book multiple. It is trading fairly similar to an HCL Tech, which is trading at 17.4x FY23 price to earnings multiple. Bernstein, Kotak, Ambit, HDFC Securities, IIFL, all these brokerages have a target price anywhere between 1150 per share to as high as 1270 per share on Tech Mahindra. And so yes, watch out for Tech Mahindra results. Watch out especially in terms of the commentary, especially in terms of the drivers for a double-digit growth in FY22.